Hello, this is David Morgan of the Morgan Report, and welcome to day two of the Metals Investors Forum. Thank you again, Matt Bennett and crew, for having me. I really appreciate it, and I think this will be one of the more interesting presentations because I'm going to focus on a couple things other than the metals markets directly, and then I'm going to wrap up with kind of why I think silver is really ready to launch, although I can't give you an exact date. So, again, Metals Investors Forum, September 2022. This is the beginning session on Saturday. First thing I'm going to talk about is the silver psyop. Are you kidding me, David? You've gone wacko. Silver psychological operation. And this was an interview I did with John Perez. John brought this to my attention. I've thought about it for a very long time. And the question is, how much money went into the crypto space that might have, could have, should have gone into hard assets? And the answer is very interesting. So here's what John had to say after he and I called the top in Bitcoin around $66,000. All right, everyone, this is David Morgan from themorganreport.com, and we have a wonderful Monday, nice and bright with snow on the ground here in Washington State, and the famous at this point in time, John Perez, and we are going to delve into silver psyop number 3. So, John, the floor is yours.
Okay, we're gonna make this one quick to the point, and it's gonna just make it clear for everyone. Because if we can go down the rabbit hole, everyone gets lost, and we'll make it simple. Because I've gotten so much feedback from thousands and thousands of people who've said they've watched the Crypto Conspiracy. Thank you all for watching on Telegram, and all the people that came from Mike Adams, Natural News, Brighteon, and the Morgan Report. You guys have been awesome, and people are awake. I'm gonna say that cryptocurrency series is probably responsible for about $250 million in sales of crypto, and that's been added to the silver markets.
So that's quite a bit. John doesn't have any verification on the number. It might be embellished, but the idea is that money did flow into the crypto space that could have or might have and most likely would have gone into gold and silver. So I looked at that further, not just based on what he said, but let's get some numbers, let's get some facts. All right, it is David Morgan, themorganreport.com, with John Perez again, and we continue on our trail. We'll call it a conspiracy because people love that word and they will tune in. But really, John, this one's interesting. I'm going to call this the Epstein episode. And this may be the Epstein episode 1, 2, 3. We don't know. But right now, I've got a screenshot up showing Jeffrey, one of the greatest economists I've ever met, Larry Summers. And who's the guy on the left with his head circled in?
Well, that is, I believe, Jess Staley. Former CEO who just stepped down from Barclays due to his relationship with Mr. Epstein there on the right. There in the middle, that is Larry Summers. I believe that's Larry's former Treasury Secretary under the Clinton administration. Okay, so the essence of the Epstein thing is what we found on Graph Commons. You're looking at it right now. If you go to graphcommons.com, you can verify this for yourself. And what you find is Jeffrey Epstein there at the center and all the connections. You can see how many are there. I won't read them all to you. The big red line says, hey, Jeffrey Epstein's foundation is connected to Hong Kong. And that's where Tether is. And if anyone follows cryptos, even at a cursory level, you know that Tether is the producer of the USDC, the stable coin, the US dollar equivalent in the crypto world. So this is a concern. You can take that as far as you want. Again, I'm looking at Graph Commons, Jeffrey Epstein, and I've underlined a few things. This Joy Ito character, Bill Gates, Harvard University, Reid Hoffman, who's quite an interesting study, and others. So just leave it at that. Just want to make you aware that there's a connection. So back on target, and this is the crux of what I wanted to know and verify, and that is crypto and precious metals. So the total of the crypto market is $1 trillion. Bitcoin alone is about a third of that. It varies depending on the price of Bitcoin. It's a little less than 390 this minute. Gold is an $11 trillion market. So think about that. All the crypto market is 10 times less than the gold market. The annual production of gold is about 115 billion. So if everything that went into Bitcoin, that'd be about 3% of the gold market, 3 or 4%. Would it have an effect? Sure, 3 or 4% of any stock, depending on if it's a neutral and there's more buying pressure or selling pressure. A new buying pressure of 4% will certainly drive it up, but not to the level that that Bitcoin's been driven up to. In other words, its relationship to gold is rather small. However, its relationship to silver is tremendous. So some of that money that went into crypto wouldn't take much of that to come back into the silver market to really make a move. Let's think about it for a second. Silver is 100 billion market. The silver annually is about a $25 billion market. So 25 billion is about 1/12 of the Bitcoin market. So it's very small. So because the silver market is so small, obviously it would have further, more impactful results if some of this money came out of crypto and went into silver, as John outlined when I gave you that video clip. John has a saying, when Bitcoin dies, silver flies. And again, moving from the crypto into silver would have a notable effect. That's really not true of the gold market. That's my conclusion. And we all like graphs or pictures, and this is a good one in my view, because what it shows you is Bitcoin in value in the green and the gold market in, call it light in brown. And you can see that the Bitcoin market really is rather small compared to the gold market. I don't have a slide for the silver market because it looked pretty much the opposite. This is a recent one from my Twitter. I topped it off with what have we been saying? And this, of course, is from JP Morgan, who's gone back and forth on crypto. Most crypto still junk, according to JP Morgan's blockchain lead claims. This Umar Farouk, chief executive officer of the blockchain unit. And China bans all crypto. This was from August 2007. They go back and forth, but basically they are the only ones that have a substantive central bank digital currency in their main system. There are many other countries that have plans to implement it, but no one has gone as far in a practical way, meaning it's used on a daily, minutely, hourly basis than China has. So now something more important, I think, than the silver or gold market, and that is bail-ins. This is an interview I did with Daniela Cambone about bail-ins, and this is the #1 most viewed video for Stansberry Research. Probably the least flattering video I've ever done, but it's really about the message, not the messenger. And this is in my car, as you can obviously see. I have one of my old golf shirts on. It has silver-investor.com, the old domain, but those shirts hold up well. It's actually silver infused in those shirts, believe it or not. So this was a whole back and forth about bail-ins. And what I'm doing now is just a summary. But I want to make you aware of, if you want to see the long version, you can go to themorganreport.com. And if you click the landing page, it will bring you to another page, which you scroll down a little bit, and this video is available. But you can find it probably by just typing in banks to seize your money in the coming financial crisis, or go to Stansberry Research if you're so inclined. I'll just give you the essence of it. Bailouts. When that took place in 2008, millions of people lost their homes, pension funds, retirement plans, and their dreams. And bailouts were to protect the too big to fail, what I call class. Bail-ins were enacted in 2010 by the Dodd-Frank bill. It makes bailouts illegal. Bail-ins are the only resolve. And this is where you, as a depositor in Canada or the United States or the United Kingdom and other parts of Europe that I'll get into in a minute or three, have the inability, once this is enacted, to do anything about it. You're basically in a contractual obligation with your bank as an unsecured creditor, which means the bank owns the money that you think is your deposit and can do with it as they see fit. And this has taken place already. And I'm saying potentially going to take place again. And this is not playing a big fear card. Look, you come to these conferences to learn things. You also come to these conferences to be, let's say, more aware than the average investor. You come to these conferences because you want the best information. And that's what I'm trying to provide to you. Am I jumping up and down and saying this is an absolute positive going to happen? No, but awareness is key. And knowing that its potential becomes higher as the stability of the global financial system becomes more and more onerous, more volatile, it's important to structure your portfolio, your finances, your savings, your bank relationships to what suits you the best, because the bankers are not going to be looking after your best interest. So the FDIC report released in 2012, it's an efficient path to returning sound operations of the bank, and it would be converting sufficient amounts of debt from the creditors, that means you, the depositors, into equity stock. So they're going to take your money and give you stock in exchange for it. On April 24, 2012, the IMF report also supported the conversion of bank deposits using bail-ins, and that's the bankers' bank, the IMF. When the Lehman Brothers failed, unsecured depositors received only 8 cents on the dollar. When the financial crisis took place in 2008, over 1 million Spanish depositors at Bankia were forced to become stockholders, and they got returned about 5% when they were finally able to sell their stocks. So they got 5 cents on their peso. On April 18th, over 400,000 depositors of 5 regional banks in China's Hunan province were prohibited from making withdrawals. The Chinese authorities later paid out a paltry 50,000 yuan, which is about 7,500 USD. And of course, Cyprus was also bailed in. So that's something to consider. Now, I have studied this fairly deeply. And if you go to Investorpedia or in some of these other sites and look at what it says about bail-ins, it will tell you that as long as you, and this is in the US, you can look up Canada, as long as you have a deposit that's under the FDIC limit, I'm sure they have something similar in Canada, you're safe. In other words, the deposits are insured in the United States to $250,000. So if you had $50,000 in your bank account, the bail-ins took place, the implication is that you wouldn't be affected. It wouldn't do anything to you whatsoever. Life is good. The bank got your deposit and life goes on. That's the implication. That's probably the most likely. However, having studied this, I want you to know that in Argentina, when they went through the crisis in 2000, 22 years ago, and they've had several since then, they left all of your money in the bank. So your 50,000, or let's say it was above 250, 350, whatever. So we'll use 50,000. But you could only withdraw 1,000 per month. And that's important to know. So yeah, your deposit's here. We're just putting a restriction on how much you can withdraw of your money. So that could happen in a bail-in where they take, let's say, if you've got a $300,000 account, you take out the 50,000, leave the 250, but the 250 that is still yours, they have a restriction on it. I'm not predicting that. I just want you to be aware of it, and it has been enacted previously. So that gives me confidence to tell you about it. The latter parts about Spain, Cyprus, and Lehman came from this article called "When Your Bank Fails, Don't Walk, Run." So now I want to do a silver update because that's kind of what I'm known for. And I continue to delve as deep as possible to get as much true information and as little propaganda as possible. And right now, I forecast silver would really bottom out around 1850, and it did for a while, and then that level was taken out. We've gone lower. Now we're in the 18s as of Friday. And there's a couple things going on here that, unless you study the silver market and know it well, are important to know. One is we're in a fairly substantive backwardation. And backwardation, for those that don't know, and most of this audience would, means that you have to pay more for the front month or spot delivery than you do the next month out. So that means there's a physical demand, and that can be a backwardation in the wheat market, the corn market, the silver market, any commodity. So I need it so badly that the futures price is less than the I got to have it today price. And that's the case for silver. The second clue that the market is not priced correctly at this point in time is lease rates have gone up. When lease rates are low, it implies that there's enough physical for those that really need it, like the jewelry industry as an example, and there's others, of course, throughout the industrial side of silver, but we'll just use jewelry. If there's enough, physical out there to meet the demand and the lease rates stay low. They've been increasing, which again implies got to have it now. I'll pay more for the lease because if I don't have it, I'm not in business. The registered inventory on the COMEX continues to come down. It's dropped off from, I think, 150 to 50 million ounces. I may be wrong on the top figure right now. I know it's around 50 million ounces. It's been as low as 30 million, 25. In fact, I was looking this up for this lecture, and I think it was in 2011 April, if I remember right. The NASDAQ put out a article that said, are we in danger of seeing a default? We're down to I think it was 30 million ounces in the registered category. Sentiment is horrible. People are just, a lot of them are giving up or just so frustrated. And the way to take advantage of this is to get in at these prices or be prepared for maybe a spike low. I would say get in over the next, several weeks is probably the best approach. Of course, there will be tax loss on that year. The leverage is gained in the mining shares. The mining shares are so dirt cheap, they're almost giving them away. You just want to make sure that whatever companies you pick are solvent. You want to ask them, what's your treasury and what's your burn rate? And as long as these companies can stay solid for, I'd say, another 6 months to a year, of course, I'm conservative, I want to be a year, you've got a pretty good gamble here, because I don't think silver, with the lease rates and backwardation, are going to stay at this level for very long. Pitch for the Morgan Report. Please go to morganreport.com and get on our free service. If you're inclined to get on the paid service, just hit the subscribe button. And you don't subscribe when you hit the button, you will get a sales letter that we've rewritten, a video, and more information. And we do have a money back guarantee, so it's not a hard sell. But and I will be putting out a new silver company probably in the next day or two, and probably a trade. This is a company that's on the NYSE that's so undervalued, it's almost given away. Last time we traded this stock, we did really, really well. And it's such a great setup. I may put that on as well. So at least a new company, if not a new company, the trade coming up for our paid premium members in the next couple of weeks or so. We are on YouTube. We are on Twitter at Silver Guru 22. If you want to follow me on Twitter, I'll give you all the news that I think is pertinent. And the YouTube channel, we do the videos that are public domain and usually post them up there for you.